MFRS 137 is an accounting standard that provides guidelines on how companies should recognize, measure, and disclose provision, contingent liability, and contingent asset in their financial statement. The main purpose of MFRS 137 is to ensure that companies record liabilities and potential obligations accurately, so that financial statements present a true and fair view of company's financial position. Define the legal obligation MFRS 137. A legal obligation is an obligation that arises from a contract, legislation, and other operation of law, which require the company to settle the obligation as the result of past event. Question B. Whether Delta must recognize a provision, is there no legal requirement to clean the land? No. Delta would not recognize a provision if there is no legal requirement unless there is another type of obligation. This is because under MFRS 137, a provision is recognized only when there is a present obligation, legal or contractive. It's probable that an outflow of resources will require, and the last one is the amount can be reliably estimated.
Question 1C. Discuss briefly if there is any present obligation that arose from a past event. If there is no legal requirement, but it has been the company normal practice to clean up any contamination caused. The practice had created a valid expectation that the company will accept the responsibility. The answer is yes, there is a present obligation, though there is no legal requirement. This is because the company past practice of cleaning up contamination creates a constructive obligation. This practice has formed a valid expectation among the public that the company will take responsibility. Under MFRS 137, a constructive obligation is treated as a present obligation. Conclusion: Delta Berhad is required to recognize a provision because an obligation exists based on its past action, even without a legal requirement.
For question A, elaborate the appropriate accounting treatment in accordance with MFRS 137, provisions, contingent liabilities, and contingent assets for the below events. For the first one, according to MFRS 137, a provision should be recognized when the entity has a present obligation as a result of a past event. Therefore, Pink Berhad should recognize a provision of 80,000 ringgit for the legal claim in the financial statement for the year ended 30 June 2024. For the second one, under MFRS 137, this represents a contingent asset because the inflow of economic benefits depends on the outcome of future events that are not fully within the company's control. Therefore, no asset is recognized, but 200,000 ringgit is disclosed as a contingent asset. For the third one, under MFRS 137, this declaration creates a constructive obligation as the company has created a valid expectation that it will settle the obligation. Pink Berhad should recognize a provision of 1 million ringgit for environmental cleanup costs.
First is cleanup cost. We will debit the environment expense of 100,000, then credit the provision from cleanup also is 100,000. Then the second one is audit cost. The value is 20,000. Then we will debit the audit expenses 20,000 and credit the account payable 20,000 also. Then the third is audit costs are paid in the cash. Then we will debit the account payable 20,000. Then credit the cash 20,000. Thanks.